Let's start with good day.
Now in today's video, we're going to deep dive into the charts and data on gold, silver, platinum, and palladium. Ultimately, what I'm curious about is what are the charts saying after silver on Friday flushed to $64 per ounce, then recovered to close at $78 per ounce? Is the low in? Is there a technical base point here now to trade against? Let's dive into the charts right now. So, number one, we saw this on Friday, right? Great flush to the downside, down to $64 per ounce. Then a recovery throughout the day. Now notice that that recovery coincided with a stock market rally. So again, as much as we look at many of the precious metals and say, hey, it's risk on or risk off in the stock market, but more of a safe haven in the precious metals, in reality, when you get into a euphoric stage in any market, it's going to trade like a risk asset. People are piling in because they're just chasing it. That's a risk asset, just like stocks, and vice versa on the panic and fear trade. All right. Now again, number one, the stock market recovered. That's a positive as well. Can the stock market hold up? We'll find out in another video. But in the near term, what are we looking at here? Let's look at it just as a base point here. We take this. This was the level that I gave you guys just days ago as technical support. Basically $71 to $71.50. And notice how we flushed below early on the trading day here, only to recover and close above. Now in the near term, that is bullish. Okay, so near term, the price analysis, technical analysis is bullish. The key here though is you have to be, as a trader, ready to kind of flip the switch if a key level gets taken out. Now, what is that key level? Any daily close below this lower zone. That would be a strict warning stop out level on the trade on silver, right? So again, any close below, basically $70 per ounce, you've got to expect further downside. All right, so that's number one. Now remember, every good investor and trader has a game plan. There's a reason why I have a show Monday through Friday called My Trading Game Plan. The idea is it's my trading game plan. What am I doing? What are my levels? In any trade, inclusive of silver, we have to know our levels. So right now we warded off. We fought back off of that break below $70 per ounce where we flushed down to 64 because technically we recovered back above that level. Now, on that note, let's talk about upside. Where is upside's first resistance? Where's the first big battle going to be fought? This is pretty easy to see, guys. In fact, I'm going to use another zone here because I think the zone is extremely important. But basically right in here, you can see again how price rallied to the upside. Chop, 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 chop. Kept hammering. You can see, I don't know if you guys can see on the video, these little tails down here, it kept trying to go back and getting rejected, and then it took off for that final euphoric push before the big plunge. Notice once we got below this level, right? So let's go back, and so I can annotate. We got below this level right in here, and then when we bounced, we got rejected, and big fall before coming back up. So what does this tell us? Now, as a technician, this clearly tells us that this is your level to monitor. In other words, price now favors upside until it gets back to about 90. If 90 can't break, then you got trouble. Then you can come back down and retest this level over here at $70 to $71 per ounce. All right. But right now, the bulls, you'd say based on this chart, in the very near term, the bulls are in charge, but only up until the big battle at $90 per ounce. All right. So we now have two levels to monitor. We have our support level where the bears will try to punch it down through. And if they do, watch out below because honestly, we'll go over this in a second. But where I think the next basic bottom is going to be. And by the way, it's the bottom that I plan on loading the boat based on technical analysis on silver. And then on the upside, we have our resistance level where the bulls will try to puncture it so it can make a run at all-time highs again. All right. So again, we have our two levels, resistance and technical support. Now, if it gets through this level, it basically has an easy shot to get back to the all-time highs. All right. And that would be your next epic battle. And notice here again, the wide range bar. This is where it started, right up here, right? So this makes sense. You can see the high of this candle here and even the pierce, and then the body closed here, and then it got rejected. So this is a very obvious next resistance level. Now, granted, in the short term, this is all that matters, resistance and support. So if you're a technical trader that's trading two levels, you're just buying down here and you're shorting right up here. If you're a bull, you really need this level to get pierced. If you're a bear, you want to see this get taken out. Now, we talked about the upside, how to get back to the all-time high. It's got to get through this 90 to 90, basically $90 to $92 per ounce level, okay? We talked about the support level, this 70-71 level right here. Now, if it breaks through here and you get a daily close, now notice it wicked, it tailed down here, right? Big tail down there, right? But again, it didn't close below there. If you get a daily close below this $70-ish per ounce level, the downside is to my next big level, and I'll show it to you guys right now. Let's go and draw in our zone here for number one. Easily seen right here. We draw this area across. Now, this isn't the end of the zone, and I want to show you why, but this shows you high pivot to high pivot. If we fall, that's going to be huge support. Now, if we go to this bigger time frame, let's go to the bigger time frame here. What are we going to do here? All right. What I'm going to do is I'm going to drag this level all the way back, and we're going to keep going back. And I'm going to show you why, guys, because we have our high from 2011 right here at about $50 an ounce, and also right here. Okay, so what we have is our zone right from $54 down to about $50. And this, my friends, if we zoom back in and let's go back into this level, this becomes my golden zone. And maybe I should say silver zone instead of gold because it's silver. But this is a huge level. This is where I believe eventually this trade will come back to. And I think at that point I will be a heavy buyer of silver, probably even the physical metal myself. All right, so not just a swing trade. Anytime I buy physical, I'm buying long term, right? Because it's too much of a pain in the butt to dump silver or to basically buy it on the physical side and then sell it, and then there's the spread. You guys get my drift. Now, which way does Gareth Soloway, chief market strategist here at verified.com, think it's going to go? I think, again, eventually it breaks to the downside, this 70-71 per ounce level, and it does trade back to 50 to 54. One of the things that has me thinking that is this. Take a look. CoinShop say they're swimming in so much silver and gold that they're having to limit purchases. All right, so this is what happens when price surges. What happens? People say, wow, I have some silver in my house. I have these coins. Let's go sell it. All of a sudden, more silver comes on the market. Now, we talked and we've heard all the narratives, right? All the narratives about how there's limited supply. Well, guess what? There's a lot more supply when you start getting the silver and gold that come from retail, and they're starting to dump the actual metal. Okay, so this is how supply shortages get solved, at least in the near term. Now, do I think long term? Like if I'm obviously buying for the long term, right? If I'm buying for the long term, then obviously I'm a fan of the belief that long-term silver is going to go higher. The reason my belief is longer term that silver will go higher, like years from now, is because of the fiat currency crisis, right? When you have the Federal Reserve and the government spending and the Federal Reserve cutting rates at any sign of weakness, even if there's not weakness. And again, the idea that inflation's okay to be, but now between 3 and 4% instead of 2%. Not even that 2% was okay, right? All of these factors contribute to my belief that physical assets are probably where you want to store long-term capital versus fiat currencies. Okay, so that's the key right there. All right, now we're going to flip over to gold here, guys, and get into gold. And to do that, what I want to do real quick is show the chart. Let's look and analyze it. All right, so let's go back here and bring up the chart. There we go. And what we saw in gold is it performing better. So yeah, sure, gold had the big flush, but notice again, it's basically all the way up here versus silver is still just off of its recent lows, right? And the reason for that is because there is fear out there in the market building, even though we had a rally on Friday. Hey, and by the way, gold went up on that rally too, which tells you it's somewhat still a risk asset. There's still central banks buying, governments are buying, and retail still doesn't trust the financial systems. And that's more gold. Remember, gold is the pure play for safe haven assets. Silver is a pure play. Well, it's a 50-50. It's a safe haven, but also industrial metal. And we did get some poor jobs data this week, the JOLT numbers, right? We also had jobless claims spiking up. And then we also had the challenger job cuts, the highest January cut in jobs since 2009. Those are all signals of trouble brewing, and that is not good for silver, obviously. Okay, so what we have here is, number one, the support level has held here beautifully. This was the first support zone right here. We have this area right down here, and you can see how we have areas from this former pivot, and that brought it there. And then we also have a trend line that goes all the way back here, and I'll show you guys this one. And again, I'm trying to pinpoint this one right in here, right? And so you can see how this trend line, it started right here back in September, bounced all the way up, hit, and then hit one more time, and then we had the blow off top. And by the way, this is very classic of kind of a topping signal in the markets, where you get this parabolic move where people are like, anytime people look in astonishment at a chart move, especially gold and silver, chances are it's getting close to a short-term, mid-term top. Now, long-term is different, right? I mean, because 2011 was a major top, but obviously it wasn't long-term because we've taken that out at this point. So mid-term is more the appropriate term for that. Now, again, gold, what are your levels on this? So number one, your obvious level here on gold is right down here, right? So 4,500 to 4,400. That is your key support level. If it breaks that, you're probably going to 3,900. And eventually, the worst case scenario that I have priced in would be back here. Look at all of these pivot highs right through here where there's major technical levels until we broke out. So this here, which is right around 34 to 3,500, that would be where I would buy my long-term holdings in gold. Okay? Up until then, I'm not interested. Now listen, to be fair, I have long-term holdings on gold already, so it's not like I'm not exposed. I'm just not willing to put more in unless we get back to about 34, 3,500. Now on the upside, we clearly have resistance right in here. You can see the high of this day here, last Wednesday, is the low of this kind of doji candle right there. And that, my friends, is a very good signal of resistance. That's just above 5,000. If we can take out 5,000, you retest your high. So we've now talked about the major support. The resistance level is right here, okay, at just about 5,100. If we can get through 5,100, we should go test this 54 to 5,500 zone right up here at all-time highs. And vice versa, if we start to fall, eventually you get here. Now, what's my perception on this? My perception is that just like silver, eventually gold does break lower and it does eventually get back to this level. But I think that is your long-term base. Now listen, I could be wrong, and I've been wrong many times before in all fairness, but ultimately I'm playing off the charts, which gives me probabilities. And so all I care about as an investor is, am I right more than I'm wrong? If I'm using probability assessment, then I need to be right more than I'm wrong by a decent margin. And that I am. Doesn't mean I don't have ones that are wrong, because that's the nature of probability. Sometimes the lower probability works out. All right, let's go on to a couple of the charts. Look at palladium real quick here, folks, for you. Palladium. Take a look at this chart. This is pretty remarkable. I have my lines on this already. That's okay. We obviously have major support. What's our major support? It's right here. Let me bring this up right here. And you can see again how we have this up ascending trend line here, and then this pivot top right there. And those meet right at 1600. So 1600 is your level. If you're a bull, you don't want to see 1600 break. If it breaks, you're headed back to 1350 to 1300. That is my buy level on a physical basis. I will start to accumulate. I won't accumulate as aggressively as gold or silver, because this is a much more, even more volatile generally than silver. But nonetheless, this would be my beginnings of my longer term holding accumulation. It would also probably be a great swing trading level as well for a snapback. All right, upside resistance, obviously double top, but we also have this unique ascending trend line that if we were to break the all-time highs, this would now be your next resistance around 2,200. Let's look at platinum. Platinum, see what platinum's got going on for us. Platinum, guys, again, for me, you can see very similar to silver. Silver broke the recent lows, but then bounced back. Look at this level on silver, folks. It's a great technical support. We have this level right here. All right, so very clearly we have support right in here. You hit it here, and then you pierced it, but we're covered. So right now, 1900 for bulls. You got to hold the line at 1900. If it breaks, 1900, the obvious, and this is a very easy one to see, the 1690 to 700 level, this pivot high, this area. Notice the bull flag right here before the breakout. That's your next level at just below 1700. All right? On the upside, you got to take out this high right here. The problem is you have this. So there's multiple steps getting back to all-time highs. 2340, that pivot high has got to be taken out. If that gets taken out, you still have to deal with this at 2500. High pivot, high pivot, high pivot. And right here, that's your next resistance. If it gets through there, then we're talking all-time highs. So platinum has a little bit more work to do on the upside. A couple more levels to get taken out before it can retrace for that. And same thing like gold, silver, and platinum and palladium. I would generally favor in the midterm, even though near term, and I want to be clear, near term, the charts have held support, so they're favorable to the upside. Longer term, or I should say midterm, a few months out, I expect lower prices on pretty much all of these commodities. All right, guys. I've got to get going. Just wanted to get you guys in the loop on this Sunday video. Thank you so much for tuning in. Don't forget to check us out at verifiedinvesting.com, where we believe in all charts with no BS. Have a great rest of your day, guys. Take care. Now, as we look ahead into the next phase for the precious metals complex, the key question investors need to be asking themselves is not just where price is today, but what catalyst changes the trajectory. Markets don't move in a vacuum, and while charts give us probabilities, those probabilities expand or contract based on macro pressure. Right now, the biggest variable on the table is monetary policy expectations. The market is still pricing in rate cuts, even as inflation remains sticky and economic data sends mixed signals. That disconnect creates volatility, and volatility is exactly what fuels false breakouts and sharp reversals in metals like silver and platinum. In other words, the environment ahead is ripe for whipsaws before a true trend is established. From a technical standpoint, what I am watching very closely is momentum divergence. Even though prices have bounced off key support levels, momentum indicators are not confirming a sustained bullish trend yet. That tells me this move higher is more corrective than impulsive. Corrections can be powerful, they can be convincing, and they can trap late buyers. That's why chasing upside into resistance is dangerous here. If silver approaches that $90 level again without strong volume and expanding momentum, the odds favor another rejection rather than a clean breakout. Markets rarely reward impatience, especially after parabolic runs like the one we just saw. Another factor that cannot be ignored is sentiment. Sentiment reached extreme optimism near the highs, and while we've seen a pullback, it has not fully reset. You still hear a lot of talk about shortages, about silver going to the moon, about triple-digit prices being inevitable. Historically, those narratives peak near tops, not bottoms. True long-term bottoms form when nobody wants the asset, when the headlines disappear, and when price quietly stabilizes at major historical levels. That is exactly why the $50 to $54 zone on silver remains so important to me. That area represents not just technical support, but psychological capitulation. Now, if we do get that downside move, it likely won't be a straight line. There will be sharp counter-trend rallies, especially if the stock market experiences sudden fear events or geopolitical risk spikes. Those rallies should be viewed as opportunities to reduce exposure or hedge, not as confirmation that the bull market has fully resumed. The bigger picture suggests a rebalancing phase where excess speculation is flushed out and price finds equilibrium. That process takes time, and it's rarely comfortable for traders who are emotionally attached to a bullish narrative. Looking out 6 to 12 months, my base case remains that precious metals put in a more durable foundation after another leg lower. That foundation, once established, would set the stage for the next multi-year advance driven by currency debasement, rising debt levels, and declining confidence in fiat systems. But that is a later story, not a today story. The market needs to reset first. And for disciplined investors, patience during this phase is not a weakness. It's a strategic advantage. As always, the key takeaway here is flexibility. I don't marry a bias. I don't argue with the chart. If levels break, I respect them. If support holds, I trade the bounce. And when the high probability long-term zones finally come into play, that's when I step in aggressively. Until then, it's about managing risk, controlling emotions, and letting the market show its hand before making big commitments.